topic, considering at what time and who all my predecessors were. The first challenge is the issues and challenges in presentation of the God before his audience. First reason is that we are discussing something which is not there. Honestly, I found it a huge challenge. How to visualize something which will come into existence at a future point in time. Secondly, this is the post-lunch session. That's another challenge I'm facing. I hope you'll cooperate. And thirdly, I'm not among one of the three illustrious predecessors in the morning sessions. I'm a gentleman, and so I know I'm faced with a huge challenge. That thing apart, now coming back to the first challenge, it was really something like trying to write the biography of a child who is still in the mother's womb. So that's something we have to see. So what I thought, and then see how this child will grow. It also depends on the two parenting, the couple, the husband and the wife. Each one wants to develop the child, bring up the child in his own way. So here, the revenue and the taxpayer and the husbands and wives, they're trying to nurture God at a future date. How will it evolve? So for that, what I thought that I will not go for the informative part, the granular description of God, because there is an overdrive of literature on God. And I will just take up certain key concepts of the God and to see, since we do not have any precedents in India on God per se, how it can evolve, what could be the thought process of the revenue as well as the taxpayer, depending on international experience. Because there are a few countries where God is on rolls since quite some time. From Canada, it's there since 1988. So my endeavor will be to pick up some of the crucial nuclear points from the international experiences of implementation of God in these countries and try to see how they can operate in the Indian ecosystem. Secondly, I would also go through the whatever theoretical evolution that God has gone through since it was conceived and then put in the statute. There was the DTC 2010. There is a judicial God. There was the enactment of God. Then there was the expert committee of the Shome committee. And then finally, the Finance Act 2013 model of the Act, of the provisions. So I'll also try to see how this package has been presented to us in the time allotted to us. And here, I would try to make it interactive since it's a totally blue horizon. So it's also my endeavor to explore with your experience how we can evolve a God which will be efficient, just, and fair, so that both the husband and the wife are happy. With this brief background, now this is going to be the scheme and content of the presentation. First, in brief, I would just like to walk you through the scheme and architecture of God. Then I'll take some few examples from the expert committee, which many of you will already be aware of, these illustrations on applicability of God in certain context. So that will give us a good idea of what is the intention behind these provisions. Because the expert committee has gone into detail to the God provisions and brought very good recommendations, some of which have been accepted by the government, and some of which, though have not been accepted by the government, can serve as very good guidance. Then what is the international perspective of God? How it is functioning in the rest of the world, where it has been there for some time. And then, in the end, what could be the correct guard approaches, considering the international experience and the Indian ecosystem, the Indian limitations. So I think we will frame the discussion in these buckets, and it will be less on information, more on ideas, more on concepts, to see how guard is evolving all over the world. Now, this is very obvious. Now, to think that guard is a completely new concept, I think will be a misnomer. There was judicial guard, and I thought I will flag this very, very critical observations in the celebrated Vodafone case. See, do you think, had there been guard, just put you a question, what would have been the outcome of the Vodafone case on the same facts at the Supreme Court level? There is an inkling of this in these observations, which I would just like to repeat. Lack of clarity and absence of appropriate provisions in statute regarding the circumstances in which judicial guard would apply has generated litigation in India. Vodafone was part of that litigation. Not only Vodafone, after the Aditya Birla and most of such cases. Now here, please consider these observations of the Honorable Supreme Court. Legal doctrines like LOB and look through are a matter of policy, and it is for the government to have them incorporated in treaties and law to avoid conflicting views. Now suppose this decision this fact was before the Honorable Supreme Court after 1/4/2016. What the Supreme Court here is mentioning, that we have taken a call on certain facts and circumstances depending on the law as it's prevalent today. But suppose there was a law which allowed us to look through rather than look at Section 9. What could have, I don't know what could have been the decision. So please bear in mind that there is a historical process to it, and that we are not in a completely new territory. We have some history to it. It's not a very oft used beaten track, but then there is a judicial guard, which the Supreme Court said no, there cannot be judicial guard without a statutory guard. Now the statutory guard in place. So please bear this in mind. I'm not trying to conclude anything, but giving a thought that please go back and see what would be the Vodafone decision on the same facts if there was statutory guard. Now, this churning has resulted in the following. Statutory guard introduced 2012, then it was deferred to by 2 years, and it brought in some very, very important flags, important triggers which we have to deal with when guard is in place. The main purpose, so I thought right in the beginning while we discuss it, let us bear in mind the nucleus of this provision, the embryo of this provision. Main purpose, to obtain tax benefit. Please bear in mind, whenever you are looking at a guard case, this has to be tested. Onus on taxpayer. Now, this is again a question. I do not know whether it is debatable or not. So, who is going to prove? Onus on taxpayer, as the provision goes, it says that unless not proved by the assessee, it will be taken as that it is a guard. It is the assessee who has to prove that my main purpose is not tax benefit. This presumption is built in the Act. But when we go to the provisions, you will find that there are two tests of guard. One is the primary test, that is a main purpose test, and second is the secondary tests, 1, 2, 3, 4. So is the onus of the taxpayer only restricted to the primary test? After he has proved the primary test, does the onus shift to the revenue for the establishing the secondary tests? This is something we have to bear in mind. So while doing a GAR case, both from the revenue side as well as from the taxpayer side, it has to be borne in mind what is my onus. We will discuss through this presentation various aspects of this. Third is treaty override. This is again a very challenging condition. Normally, whatever is beneficial to the taxpayer between the treaty and the statute, that is accepted. But here there is a treaty override. How do we get over it? Suppose a DTA has anti-avoidance rules embedded in it. There is a LOB clause. Will the treaty override still continue? The expert committee has made some observations on this, so we have to handle this. And last but not the least, the administrative part. After having done all this, the main purpose, the documentation, having clarity where my onus lies, where the revenue has to prove, whether I want to treaty override, I have kept it aside. Now appearing before the panel. That will be again a challenge. And this will be a very high-powered panel with a report which has passed through the musters at the hands of the assessing officer and the commissioner. Just see the enormity of this. A report after lot of verification, examination, investigation has been submitted by the assessing officer for approval of the commissioner, and the commissioner is satisfied that here God applies, and then he has sent it to a very knowledgeable panel. One of the members is a High Court judge. One of the members is a Chief Commissioner of Income Tax, and one an eminent academician or expert. So I thought I will give you this, brief roadmap before we get into the discussion, the granular discussions. So this will be the broad perspective, I believe, for handling GAR, both for the revenue as well as the taxpayer. Just a brief look at the provisions. We all know, but still I thought we will just flag some of the main concepts. Now, the arrangement is called impermissible avoidance arrangement. It has to pass muster of two tests. One is a primary test, other is the secondary tests. So these are the main, the primary tests. Now here, this primary test has to be backed up by the secondary tests. Only then the arrangement will be categorized as an impermissible avoidance arrangement. We'll take up main purpose later. What is main purpose? Now we'll go to one of the secondary tests. Suppose presume that the main purpose test has been, the case has passed this muster. Now, one of the secondary tests creates rights, obligations, unlike parties at arm's length. Now, why we are saying that main purpose test it has failed is also because secondary purpose test it has failed. Now, to see whether the rights and obligations that have been created, which will be normally not created between unrelated parties, that's a very crucial test. But how do you pass this test? How do we examine this test? Now, second, now this kind of a transaction results in misuse or abuse of tax provisions. How do we face this charge of the revenue? Or how does the revenue establish this? Now for this, I found that after a little bit of research, there is a theory called clear and unambiguous policy test. In order to not make it very cluttered, so I will use some material which is also not there in the slides. Excuse me for that. Now, this clear and unambiguous policy test has been prescribed in a decision of the Canadian court in the case OSFC Holdings versus the Queen. This case was in 2001. Now, in this case, what does it say? It simply says that to test whether it is an abuse of a provision, whether the main purpose is for tax benefit, we have to go into the intention of the legislature. If the statute clearly spells out the intention of the legislature, yes, what is the purpose of this provision, then guard is not difficult to apply. In this decision, the Canadian court then says, but the clear and unambiguous policy test will make administration of guard difficult if the legislative policy is not clear on this. Now, based on this, we have to see where we stand. Does the language, the drafting, the scheme, the process as found in the statute pass this clear and unambiguous policy test? So for this, the background literature to provisions will be very important. I'm going into very basics. So suppose there is a case of misuse of treaty. To show that whether the legislative policy in bringing up this provision, so the second secondary test, we have to see that what was the intention of the legislature to. There are certain SAR policies here. Specific avoidance rules are already there in the Act. So we have to go to the explanatory notes, memorandum of those provisions to see what could be the legislative intention, whether this legislative policy test passes. So this is the basic test for judging or examining this issue. Next important issue is commercial substance. Now, it is an oft-used expression, but there is no final clear-cut answer to it. Can you please explain, any of you, what is commercial substance through an example? Sorry, I'm just trying to find out, because I found it very difficult to find an instance where I can, distinguish commercial substance from business purpose or economic substance. We use these words very loosely. Presently, it may not pose difficulties to us. But when guard, we have to be very, very clear and focused on these concepts. Because our case will depend on, both the case of the revenue and the tax will depend on whether this commercial substance or not. An instance which came to my mind is, a company may sell an office, very simple, and then may again lease it back. So what will be the commercial substance flowing out of it? The commercial substance flowing out of it will be that now the assessee will try to, taxpayer will try to show that this has been sold. It has been leased back. But what is the commercial substance? Commercial substance is that it has not been sold. The whole case now in this, suppose it were a guard case, it will depend on whether actually it was sold or not. I hope it's clear. It's such a nuanced point. Please let me know if it's clear.
But sir, if it results in substantial flow of cash, if the business, the seller desperately...
We are going to that. See, this is only one of the tests. I'm not saying that. But commercial substance, you have to understand very clearly. There has to be absolute clarity on this. Because now we try to interpret, I was just discussing during the lunch break, we try to interpret concepts in our best interests. The taxpayer will say, yes, commercial substance है, Everybody will say, no, nahi hai. So it's not so. GAR is not that easy.
So is it something, comparing brass plate company versus, full-fledged office structure, etc.?
Exactly, yeah. Suppose you set up a company and say that this is the decision-making jurisdiction. Naturally, you have to back up with your level of employees. See how many people are engaged there. A decision-making where all the units that a business will expect are there. Sales, marketing, finance, technical. What is the level of qualification of the employees? What is the documentation? How are the emails being received? Who is replying to the queries being made from other units? So this will establish commercial substance. If it is not there, it will be difficult to pass through GAR test. So this is again very important concept.
Excuse me. The commercial substance is for the entity or is for the transaction?
See here, I'll come to that. See here it is for the arrangement. And arrangement will be between parties. Arrangement will be a structure. So whatever is part of the arrangement has to have commercial substance. Transaction may be a part of the arrangement. If you see it is impermissible avoidance arrangement.
So what is the difference between misuse and abuse?
See, abuse is absolutely blatant misuse. That is how, see, you are misspelling a word. Suppose a competition, suppose COMPTI, you just omit to mention I. So there is a minor mistake. Abuse is that you say COMPATISHION.
Okay.
So this is all about extent. In the context of, see, suppose.
So both misuse and abuse have the intention behind it. A misuse could be accidental, whereas abuse could be intention.
Could be. Yes.
So let's say
Good point.
Let's say issue.
Yes. It can be inadvertent. Yes. But again, I will come to that. The judicial decision which says that it is extent also matters. Extent and intent. So we'll come to that. So now,
Misuse is a lesser evil.
Huh?
Misuse is a lesser evil.
It could be accidental.
But even that is captured.
The moment you say misuse, it means if there is a,
But there is hardly any difference between those two. When it comes to application, if it is only a misuse, GAR will apply.
Yes.
So it did not be an abuse. So there is not much point in getting over it.
Okay, perfect.
How you present it.
Yes.
Where is the bright line?
bright line test.
That is misuse.
And see again, I'll just take a few minutes for bona fide. So we have this, what is this main purpose? That basically all these primary tests and secondary tests, we have this international precedents of the clear and unambiguous policy test, then misuse and abuse, what it entails, commercial substance and bona fide. What is bona fides? Again, probably there will be debate, but I try to find out what is bona fide. Good faith. Done in good faith, absence of fraud, just correct me or add to it, unfair dealing, or acting either by simulation, you are simulating something which is not existing, or dissimulation. So this in brief will be the common man understanding of bona fides. There will be many more interpretations. So just to give you a brief sketch, brief outline of these concepts. So this is again, a task of the revenue and the taxpayer. While they're handling GAR, is whether it passes the policy test, whether there is misuse, abuse of treaty, whether there is commercial substance, whether there is bona fides. Here,
Sir, this clear and unambiguous policy, that is what is creating more issues. For example, circular number 23 of 1969, very wisely worded, way back in 69 on international taxation. Now in those days, while issuing, CBDT would have thought this is the right kind of circular. Today, lawmakers think that no, this was not proper.
exactly.
So and then retrospective amendment comes.
That's why I say our topic is issues and challenges. So these are exactly, this is my point. In India, it is very difficult to have this test get through. There are very few provisions which will pass this test.
Exactly.
So we do not know what is the legislative intention, because intention changes like weather. So these are the difficulties, and we have to handle them. For example, even after GAR, you will find there is so many literature, so much of decisions have come. There's an expert committee, there is a notification, there's a finance minister's speech. So all these things have to be taken into consideration while we are handling GAR. So this is our challenge. Now again, commercial substance, I'm not getting into the nitty-gritties of it. So the Act has, they have also defined what is commercial substance, what is deemed to that commercial substance. Apart from our concept of commercial substance, that selling and leaseback instance. So these are the defined commercial substance. Now the challenge is how to handle it. It's very easy to read and then understand. But being in the other side of the desk, I know how difficult it is for the revenue to formulate, to have an opinion on this, and how difficult, I fully appreciate. Not only when I am out of the department, but when I was in the department, how difficult it is for the taxpayer to respond to the opinion of the revenue. Now here, I will just try to take you through in this commercial substance, this part, to section 97(4) of the Act, which says, first it says that if you see one of the tests for establishing a tax avoidance case is the timing. When was that interposed? If you remember Vodafone, they said that it had lasted. It was originally there. So it did not, the timing test, it passed the timing test. So if you remember, in the original draft of GAR, there was a provision 97(4) which said that GAR will apply irrespective of the timing of the setup of the so-called unit, the arrangement. Second, whether or not there is income arising out of that, even if an arrangement results in revenue mobilization for the country, for the source country, let us put it very simple. Even then, irrespective of that, it will apply. If you remember 97(4). And fact that there was an exit route envisaged in the arrangement. So this was to counter the Vodafone decision. Now expert committee went into this and they suggested this will not work. Because on one side we have this decision of the Supreme Court and on one side this law, whereas the issue that is we are going to handle is fact-based. So it is very, both the parties will try to put their facts in their particular buckets. Now in this case again I will take you back to the Vodafone decision. Now, while giving its ruling, the Vodafone decision has laid down certain tests to see the commercial substance or main purpose test of a structuring. Now participation in investment, whether the taxpayer has actually participated in investment or not. This will be a big criteria, big test. Secondly, duration of time during which the holding structure exists. Whether it exists for 2 years, 3 years, 4 years, 5 years, 1 year, 6 months, or even 10 days. I have seen cases where the structure was created, the transaction took place, the structure went off the records. Period of business operation in India. This is one of the platforms on which the Supreme Court, again in Vodafone, they based their decision. They said they have huge interest in India, so there is no question of making further tax planning. Generation of taxable revenues in India. So the ground that the taxpayer can take is that, why shall I avoid tax through this arrangement when I am already paying so much of revenue to your country? And that's a valid argument. And after the exit, whether the business continues. So these were certain tests given by the Vodafone decision. Now since by this 97-4 in the original draft, all these tests were put to nothing, they were nullified, Shown committee made a representation, made a recommendation, saying that this may be there, of course, but a holistic view has to be taken. They cannot be totally ignored. So if you remember, in the 97-4, in section 97-4, now the present act, it says that which may be relevant but not sufficient, these factors. So please bear in mind the guard, that will be an important tool to handle guard. And even if my unit lasted for only 1 month, but not necessarily it will be a guard. Simply just because the reverse, because this unit has been, the superimposed structure has been there for 10 years, it also will not necessarily mean there is guard. There is no guard. So now please note this 97-4, this change on the recommendation of the Shown committee, that these factors, the period of time for which the structure exists, whether there is an exit route in the tax structuring scheme, and whether payment of taxes are being otherwise made. So this may be relevant but not sufficient cause for invoking guard. So friends, this is the structure that we get of guard, and we also have some idea now that how to deal with it in a very rough and ready manner. Now what happens if after all this now guard is applied? So the statute says these are the consequences: disregarding or recharacterizing any step, disregarding the corporate structure, recharacterizing the residence, disregarding the accrual, receipt or expenditure, disregarding the parties. So these are the various consequences, major consequences that will flow out of this. Now again, for guard representation, for handling guard, we have to see what will be the impact of this if the revenue were to execute any of these consequences. Now suppose recharacterization, a source of income from debt. Suppose debt is recharacterized as equity, vice versa. But if it leads to an absurdity, it's not allowed. Just because guard allows you to recharacterize or disregard a step, you have to also see what is the consequence that you are having. In many of the TP transactions, I find that adjustments have been made. After the adjustments, the margin becomes more than 100%, 200%. No, that's an absurdity. So absurdity of the result also have to be borne in mind. That's why I thought I will just flag this slide. Consequences, even if you've lost in establishing that, yes, there's no guard in this, or revenue has recharacterized, has taken some of these consequences, we can go into the result of these consequences and say, no, these consequences absolutely commercially, in reality, it's not possible.
So does that, sorry, excuse me, does that rule out double taxation of economic double taxation of different individuals?
Yes, of course. There cannot be double taxation in any manner.
Of different individuals?
Yes. During the same year or of the same
Of the same income, I'm saying.
Same income. Exactly. So this we have to see. I'm not going into the details of this, but these are some of the issues that we have to bear in mind while handling cards. Both for the revenue as well as revenue also should be conscious of a consequence, executing a consequence which it cannot justify. Now this adjudication process, I'm not going into this in detail. This is an administrative process. Only thing that I said that it's a very high-powered, knowledgeable and very responsible body, responsible panel. the process has been made. We have to give credit to the legislature that it has been made quite risk-proof in that sense. I hope it works well. Just as APA is working well. APA is working well because of the structure and because of the quality of the people involved. So this is also, the intention of the legislature is very clear. It's not going to be one of those flippant bodies. It's going to be a serious body with people with knowledge and sense of fairness. Let's hope it works. Then there's alternative. Now see, what are the alternatives? We know that AR is available. You can always read. Option is always there, and these assessments are appealable. Now, we know that now this notification has come in I think October 2013, which has again lent further clarity to the GAR statute. The monetary threshold is INR 3 crores in aggregate of all transactions. So any transaction which is less than this will be outside the ambit of GAR. But here is a catch there. Now, all parties, it has to exceed 3 crore. Suppose one of the party has less than 1 crore, less than 3 crore. So it will be an issue for him. Second, in a transaction, how do you quantify, how do you measure this amount in the beginning? So that's an ambiguity, I think, that needs to be addressed. Then this is very good step, exemption to FIIs. If you are SEBI registered and you have not asked for any treaty benefit, you are out of GAR. There's also that this offshore derivative instruments of derivative investments by non-residents, that is also GAR exempt. And whole or part, if you still recall, in the original draft, even if only a part was suppose superimposed, questionable, then the entire scheme was put under the grills of GAR. Now they have, on the recommendation of Shom committee, they have changed it, and they have said that in such a case, there are 5-6 steps in a structure. Out of this, if only one of the steps, when the arrangement is subject matter of GAR, then only that transaction or income arising out of only that part will be applicable. So they have reduced the impact of the earlier legislation.
But the result will be as a consequence of all those steps. So basically, when you talked about the earlier slide about the absurdity of the result,
Yeah.
how will you correlate the two?
That will be basic to you. That will be basic. Those are the basic requirements,
Okay.
as we discussed. So again, this has to be again, aligned with each other. It's not very easy. So all these things have to be aligned, and then a case presented before the revenue authorities. Again, see whether it is whole or part. That also again are questionable. The revenue will try to bring out a case. It's not a part of that. It's not a part transaction. It's a whole. For example, the Vodafone, the entire structure is there out of India, right from Cayman Islands down. The issue is that whether it is one structure or it's a part structure. So those interpretation issues will be there. But to the extent possible, they have said if it is established that it is only part of the transaction, and this part is only resulting into tax avoidance, then effect will be only restricted to the income arising out of this part, not the whole.
So in Vodafone kind of a transaction, it will be applied only to the Cayman Island company, not to Mauritius company.
Yes.
Whole and part.
Yes, I think so.
So where the treaty benefit has to be.
Yeah. For example, if you remember the Aditya Birla case, the High Court, where the decision was in favor of the revenue, then what had happened that this US company had floated a subsidiary in Mauritius, right? But had restricted its rights. The agreement between the US and the Mauritius entity, the US parent and Mauritius entity, was that the Mauritius entity will be only a permitted transferee. It can transfer the shares of the Indian company which was holding only with the permission of the US entity. Second, US entity, although it had transferred the shares of the Indian company to the Mauritius entity, it had yet retained its right on it by being a participatory shareholder. In the agreement between the two parties, these conditions were there. So the revenue built up a case initially that this Mauritius entity is only a pass-through entity. So the capital gains exemption will not be available. Now the Honorable High Court looked at it in a very interesting manner. I was on the side of the revenue in this case. I really appreciate it. They said they did not accept this argument. Said, why are you saying this Mauritius entity is a conduit entity? It has done some business. It has been there for some time. But what they said is that, now look, please let us look what is the investment pattern, how the investment has come here. Where has the money gone? And then what is the agreement? Is there any control of the US company on the Mauritius company? So control was established through these condition clauses. There were 3-4 more clauses. And it was also found that when the Mauritius entity purchased the shares of the Indian company, the money was directly paid by US. Now, based on these facts and certain many other facts, I'm just giving you the core facts, the Honorable Court held that this is a case which has not to be tested on the Indo-Mauritius Treaty, but an Indo-US Treaty. So they did not, see they said Mauritius circular apply. But here we find because of the investment and the control, actually it is the US company which has undertaken the transaction, and so it is the Indo-US Treaty that will apply. So these types of situations will arise. So that we can also take such arguments that suppose a treaty between two countries, a multiple transaction where multiple countries are involved. Now we have to see each of these treaties which is favorable. Revenue will say which is favorable to revenue, and they will try to apply that treaty. We'll come to certain examples when we'll discuss this. We'll come to some examples. Now this is, please bear this grandfathering provision is very important. There's a catch there. Do you get any catch here? Can you get any subtle catch? You should be knowing. GAR not to apply to any income from transfer of investments made before August 30, 2010. And GAR to apply to any arrangement in respect of tax benefit obtained on or after April the 1st, 2015. Now, what is grandfathered?
Income.
Income, investment, arrangement.
Investment in
What is grandfathered?
From transfer of investments, only capital gains.
None of them is grandfather.
That's right.
Only capital.
Is the only thing which is investment made prior to this date, and only capital gains income arising out of it is grandfathered. Rest is all fathered and son. So please bear this in mind. So arrangements involving payment of interest, royalty, etc., irrespective of date of agreement, are applicable. Now, so this is the the theoretical aspect of GAR. We have seen commercial substance, what are the issues arising of all that. It's not possible to come to any conclusion. Now, I will take some examples to have guidance. Some examples given by the expert committee to show whether GAR is applicable or not. See, this is a committee, it's a neutral committee. So if you remember, before this, there was a paper issued by the Revenue Department on GAR examples, which was found by the stakeholders to be very one-sided and inadequate. So now when this committee was formed, they went into those instances, also collected their own examples and tried to show what exactly is GAR for our education. So I thought that let us, in the Indian context, how it can evolve through the eyes of the expert committee. It will be a good guidance for all of us, the revenue as well as the taxpayer. Now, example 1, they say that what is the difference between tax evasion, tax mitigation, tax avoidance, and GAR. First instance, India Chem Limited sets up a unit in SEZ in FY 13-14 to manufacture chemicals claims and then claims deduction under section 10A. It's a simple case of tax mitigation allowed by the law. So see the kind of pains that this committee has taken to explain what could be GAR. They have gone from the very basic ABC level. So here is a case of a tax mitigation case, hence revenue should not invoke GAR. Second, India Chem has another non-SEZ unit and diverts production to SEZ while doing only packaging there and claims as manufacturing SEZ whether GAR applicable. A clear case of this is a case of tax evasion. So tax evasion in any case you can capture. There is no question of GAR being administered here. So if it's a case of clear tax evasion, see I have this much of money, I have not disclosed it in my return of income. So you cannot have GAR for this. So they have also excluded this from GAR. Clear case of tax evasion. Clear case of tax mitigation. Third, India Chem transfers the product of non-SEZ unit at a price lower than FMV and does only insignificant activity in SEZ. Thus shows higher exempt SEZ profits than the non-SEZ unit, whether GAR applicable. Oh, this will be simply covered by TP provisions. There is a SAR for this. So they try to explain, no, GAR, don't involve GAR in this. There is a separate provision which takes care of this situation. Fourth situation, SEZ and non-SEZ unit work independently. India Chem gets new orders to SEZ unit. Only work in SEZ unit gradually declines. No shifting of any equipments. Can GAR be invoked on the ground of reconstruction of business? Again, the expert committee says, no, please go back to the section and apply that section. So no need for GAR here. There is a SAR, if it is not at market value and FMB and all that. So, in this excellent manner, they have first tried to mention in example 1 what cannot be GAR, what is not GAR. So these are certain cases of tax mitigation, tax evasion, deep transfer pricing cases, SAR, which cannot be made, subject matter of GAR. Here is a case. This is a case that we were just discussing. Now, there's a treaty between country. I hope you are able to follow the slides.
Yeah.
So I'm not explaining. Now here what happens, you see the funding part. It comes from Y Limited to A Limited. So the expert committee says that now only this country A unit is only to avoid tax. So there is GAR. But subject to Mauritius treaty and the respective provisions of the treaties. If there is an LOB clause, so that clause will test the veracity of this transaction. And if it Mauritius, there is a circular, so this will not apply. There is one simple case where GAR will apply because this A Limited does not have substance. Now this is, I come to that point of misuse and abuse. I hope you follow this instance. This is on substantial interest. Suppose the act says that if the Indian asset, the foreign entity, has less than 10% interest in the Indian asset, GAR will not apply. But you split your entities, you create two WOs, and then split this 20 into 2. It's a case of GAR. You are abusing that provision of the treaty or the act. And then it does not pass the clear and unambiguous policy test, because it is the intention of the legislature to exempt only a non-substantial interest in the Indian asset. So this is a clear case of abuse of a provision. So you are splitting your interest of 20% by creating 2 units, and then you are transferring the assets.
If, let's say, one of the K or L was held by a third party, and then A buys the shares in one of those companies later, it's not created to split. It was already there that way.
I think yes.
Then
If
there
there
is
is
no
some commercial
misuse.
substance, yes. You can prove commercial substance, then you'll be out of this.
Then there's no misuse.
Yeah. And if that company has substantial business,
Yeah.
that also passes the business purpose and commercial test. There will be no GAR. But here is a clear case of GAR, an absolute abuse of treaty.
So in the earlier example, if A is a SPV, specifically, incorporated to hold as a holding company structure, then
I think this is a commercial substance.
it will not.
Yeah. Because many times the countries, all these big Indian multinationals, they're investing abroad, they create an SPV. That's perfect. Because your tax benefit is not the only purpose.
Exactly.
So here that primary test you are qualifying, main purpose test is not tax benefit, but business. There is also issues whether there can be simultaneous tax benefit as well as business purpose. So if there is simultaneous business purpose and tax benefit, then the main purpose is not tax benefit. Now this is one example. If you follow this example, now Z company is in India and A limited company is in a low tax jurisdiction. A limited is the taxpayer, for example. Now it creates the director of Z company now wants to show that there is no PA in India, for example. What he does, finalizes the contracts in India but shows purchase between country P and Q and shows purchase and sale in country A. Day-to-day operations are A limited and carried out in India, but goods move directly from country P to Q and transactions are recorded in A limited's books. Now tell me whether GAR would be applicable or not.
Yes.
I think yes. That's the answer of the expert committee also. So here the whole entity you are creating just to de-link the Indian connect. Because the sale is directly between those two countries. It's very important to say the pure, and this is also a trading company, export-import company. Something wrong with that? But here there is an issue. Now again coming back to that, if they are related parties, then, and if it is compensated at arm's length, then there will be issue of transfer pricing. I hope you got that point. The issue is that second bullet is again important. If any activity is being carried out by Z company for A limited, then Z company is required to be compensated at arm's length. SAR applicable and GAR not to be invoked. Suppose now there is a transfer price, this can be a transfer pricing issue. It can be a GAR issue, it can be a transfer pricing issue. As we were discussing the first half, that these will be issues, overlapping issues will be there.
So does it mean that in Z company there are no transactions recorded at all?
That's the case here. Purchase and sales in country A, goods move directly from country P to Q, day to day.
How would somebody come to know about Z company's activity?
That's the job of the revenue to do. That's the investigation, we will do investigation. So friend, this is what the thought process of expert committee is. With certain instances, there are many instances, there are 20-25 instances. I thought I would just pick up the ones which are very relevant and which are happening. In my experience on the other side, these sort of transactions happen very often. Now, to the last section is international perspective for GAR. Now, this is the Indian template. We do not know how it will work, how it will move. We have the legislation in place, we have the approving panel in place, we have this expert committee's eyes to look through this. we have the amendments, and we have the various judicial decisions, circulars. So we have this body of information, body of literature on GAR. Now, what is the international experience? So let us learn from that. Now, as you know that presently there's a lot of debate, even in the G8 countries, about erosion of tax base, as a result of which BEPS is coming. There is an action plan for BEPS. It's going to be in place for September 2014 and some part next year. And then, but what they say is that international, the thought process is that GAR should not be applied to plug foreseeable methods of tax evasion. It has to be all fact specific, only on that facts of the case. So it expects countries not to use GAR to plug certain expected modes of tax evasion. For that, BEPS and other provisions are there. So that's one good thought process, that GAR only will be fact specific. It will not be implemented to increase your tax base, no. And also it will be not be implemented for resource mobilization, for revenue mobilization, no. That is very clear. Then there is a concept of what is acceptable avoidance, what is unacceptable avoidance. There's a lot of international debate on this. I've tried to put it simply. So now, I thought that latest, which is the latest country to be thinking about GAR. This is the United Kingdom. They have been deliberating on GAR for the last so many years. They have come with a draft, the draft paper, a consultation paper. I thought, let's have a look into it. That's the latest available in GAR, which says that introducing a broad spectrum of GAR would not be beneficial for the UK tax systems. This would carry a real risk of undermining the ability of business and individuals to carry out sensible and responsible tax planning. So say, please don't let GAR be a hurdle in the way of responsible tax planning. And that on the other hand, introducing a moderate rule, so that is the key word, moderate rule, which does not apply to responsible tax planning and is targeted at abusive arrangements would be beneficial for the UK system. So the idea is that don't make GAR an overarching provision to catch every and each transaction. It's only the extremely abusive transaction which you catch under GAR. So this spirit can be, whether we do not do in GAR in India, but this will be the spirit under which GAR will be implemented. Now, certain countries, and as I told you, to the some key judicial decisions with reference to GAR in these countries, we'll have some learnings here. Canadian law, Canada is very experienced in GAR. They're one of the earliest proponents of GAR. So the GAR provision since 1988, they have. Trigger event is that, again, misuse or abuse. Unlike in India, which is the main purpose of tax benefit. Please remember. So this the trigger of Canadian GAR is misuse or abuse. Now, but then what is misuse and abuse? There is this decision of the Canada Trust Co Mortgage Company in 2005, which I already discussed this. Abuse not established if it's reasonable to conclude that an avoidance transaction was within the object, spirit or purpose of the act. Now, but then this decision then says what is actually misuse or abuse of act? That Copthorne Holdings Limited versus Canada Revenue. So now the act says that please don't put blinkers in your eyes. If the transaction has given a secondary tax benefit comes as a secondary advantage, then it's not a GAR. So transaction may have a tax purpose, but for not necessary for it to be the primary reason for the transaction. So that is not misuse or abuse. So this decision has clarified that in the bargain, in fulfilling some commercial purpose, if I also get some tax benefit, it's not misuse or abuse of the act. This is one good learning on the actual concept of misuse and abuse. Even that means even if it defeats the purpose and object of the act, but if it is not primarily for tax benefit, and the tax benefit is secondary, then GAR will not apply. Now, the earlier decision, the trust code, also says very well that what the taxpayer should do to defend its position. The onus is on the taxpayer to refute the following on the balance of probabilities basis. One, the assertion that a tax benefit results from the transaction. You have to prove no. Either there is no tax result, or the tax result is only secondary, and the tax result is not the only purpose. And second, the assertion that transaction was an avoidance transaction. There the court says that the taxpayer has to prove that it is a bona fide transaction. If there is a tax benefit, now comes to the onus part. Now, if there is a tax benefit and an avoidance transaction, if you are able to establish, the burden then falls on the Canadian revenue to establish that there is abusive tax avoidance. So there, in Canada, the judiciary has, in this decision says that, to say that it is an abusive tax avoidance, there may be a tax avoidance, but so it is an abusive tax avoidance, the Canada Revenue Agency has to prove. Australia. Now, Australia has one of the most detailed GAR provisions. So I will not go, because in the interest of time, I am not going through all this. They say that, is there a scheme? Is there a benefit? And what is the purpose? Now, in India, see, this we can take guidance from this Australian. Now, for the purpose part, they have come out with a tax office guideline, and they have called this is the 8-matter test. They are very specific on this. Whereas in India, we have not defined what is the main purpose, is left ambiguous. So I will just come to this 8. Now, this the Australian tax office calls the 8-matter test. Manner of entering the scheme, form and substance of the scheme, time of entering and duration of the scheme, the income tax result that for part A would be achieved by the scheme. Time is up to 4 o'clock.
Yes.
Change in financial position of taxpayer that resulted. I mean, these are the 8 specific criteria, and each GAR case is tested on these principles. So we can, for our use, for the revenue, we can take guidance from this. So I thought I would share this with you. There's a very specific and detailed and very focused guidelines on GAR. So here are certain cases, instances in Australia. Now this is a case of British American Tobacco Services Limited with a Commission of Taxation. The case is there for you to see. What happened in this? There are 2 entities, BAT and Rothmans. BAT sold to Rothmans, and then Rothmans sold these 9 packs to competitors. So what capital gains they get, they had capital loss. So this was done for rollover, set of a capital loss. Court said no, this is actually a GAR case. Australian. They said it is a GAR case because there was nothing prevented a single vendor to sell to the competitor. There was no need for BAT to sell it to Rothmans and then Rothmans to competitor. That's why coming to that, they say there is no commercial or legal reason for disposition to be effected by a single vendor. Manner of scheme formulated and carried out explicably only by taxation consequences. If you read this case, this is a very good case, which elucidates the concept of GAR very well. And correspondence mandated, and there was documents also in this case. Correspondence mandated to complete merger prior to entering into any contractually binding arrangements for the sale of relevant brands, which created the framework for claiming rollover relief. China being China, they have their own set of rules. The trigger event is if an enterprise engages in a business arrangement without bona fide commercial purpose that results in reducing its taxable revenue or taxable income, the tax bureau has the right to make adjustments, but this is very important, based on reasonable methods. Now in this, coming back to our discussion on recharacterization, what we said, even after recharacterization leads to absurd results, that means the entire exercise has not been reasonable. Probably the Chinese guard implicitly admits what we discussed in the earlier half. That's the point I wanted to bring in here. See, whatever you do, ultimately the result cannot be absurd. That's very critical to all, tax, fiscal administration of fiscal statutes. Now, South Africa guard, I don't have to discuss much, is almost exactly like India. India has taken substantial portion from the South African guard. So you please go through the guard literature of South Africa, you'll get a hang of what could happen in India.
Are there any case law developed in South Africa? Or is too early?
I didn't find, but their guidelines and their tax office circulars are very exhaustive. So you can go through it.
It can be applied by interpreting the Indian law,
Which one?
Australian guidelines of South Africa.
Why not? See, after all, you are only giving a perspective. We rely on OECD guidelines. We rely on UN model. So the world has become flat. So both the tax administration and tax representation has to also align. Of course, in my opinion, yes, we have to. Otherwise, how do we bring in the perfect model? That's why, this for these taxes, the G20, G8, they are bringing, that's why BEPS is the best thing to bring in. One of the, purpose of bringing in BEPS is to have consistency in international tax policies. So that India does not go this way, China does not go this way. Now, I thought this UK again, guard, because that is the latest model available to us. So how you see the thinking is changing since 1988 guard to now. The UK says what is something in the McDowell decision, what they have said, artificial device, if you all remember. Here they say that features of an arrangement should be abnormal. Just consider the expressions. Contrived. I mean, it is very clear in this is of course not the act, this is a consultation paper, but what they're trying to arrive at is that it has to be absolutely blatant. Abnormal arrangement, contrived to achieve abusive tax result. It has to be very clearly an artificial device, an extremely visible artificial device. So this is again a tax law which, of course, I don't have the time, so. And United States again, they are again going back that old judicial guard concept. That there is no provision like guard, but they have recently brought some IRC codes, according to which I think this is all the basic judicial guard. It is economic substance, substance of a form, step transaction, business purpose, and sham transaction. So US guard, there is no guard, but then they are guided by the judicial principles. Here, this one case I thought it's interesting. I just share with you before we close. Now, this is a step doctrine. You see, a loan, third-party loan, has been given to, say, financial and affiliate taxpayer F company, which again gives loan. It goes down to the taxpayer. Part of it, the taxpayer repaid again through these steps. A part it repays directly. If you see the graph. Now here the court says this is a case of guard, because now the first step, what they're doing is that India, this taxpayers country and Netherlands, they do not have a withholding tax provision. So without withholding of tax, the money is being repaid, whereas here in the other, there is a withholding of tax. So this entire step you have created to avoid withholding of tax. That is the sum and substance of this illustration. And they say for all these, the loans to have traveled through all these steps, there was no commercial substance. Now, friends, the last slide, don't worry, I'll not take longer. Now, what I could find is that there could be two approaches to handle guard on the practically on the ground. One could be the purposive approach. You go into the purpose of the act, but we say that something like South African guard, and then we get into all that. But what are the downsides of this? Purpose is more objective, but the sole or main purpose of the arrangement is the relevant purpose and not the subjective purpose of the taxpayer. And although provision indicates that establishment of main purpose is essential, methodology to determine the same is unclear. You do not know. And the absence of simultaneous business purpose or a bona fide purpose test. Now, in our act, it has not said that whether there is, if both the purposes are served, what we'll do. So, whether this purposive approach will be good or misuse or abuse test. That to prove that, see that how the treaty or the particular article of the treaty or particular provision of the act, it has been misused or abused. So, these are the two approaches. And see, then again, what is actually this misuse abuse? Now suppose a test could be that whether because of this arrangement, the profit that you are showing or the deduction that you are claiming is as per the economic value of those transactions. Whether your economic profit is as much as your declared profit or your economic cost is as much as actually the deduction that you are claiming. So that is a very key to prove abuse or misuse of act. Because the legislature of any country wants to allow only the economic cost, the actual cost, not a contrived artificial cost. Similarly, it wants to tax the actual economic income. That's why this process of auditors could to see that whether the declared income is as per the economic income. So this we have to bring in our GAR administration. The concept of economic income and economic cost to see whether the deductions and incomes actually declared and claimed are in alignment with this. And friends, so thank you so much. Just before this, after thank you, this one slide was missing that I emailed. So there I just certain again issues just to conclude the issues that we discussed. Is GAR versus SART. Then another factor which I just forgot to mention is in the present world. As you say, what is happening in the Starbucks case, the Google case, the tax morality issue has become very important. So remember the Starbucks, as per law, they are not supposed to pay any tax. But there is so much of public pressure on the government and on the taxpayer. The Starbucks has said, yeah, I'm ready to pay some tax, but the government of UK doesn't know under which head to collect it. So whether it is a sin tax, morality tax. So now point is that the kind of clients that we will be handling, a lot of reputation is at stake. Handling card. The point I'm trying to drive home is that this reputational management of the client that we will be handling is very crucial in handling card. Because the whole world is now somehow watching. And what's happening in the G8 countries is a pointer that even in those developed countries it has become an issue with the people. So that would be one very important aspect of GAR, how we handle this reputational risk of the clients. Then there will be certain issues with GAR versus TDS. Suppose an arrangement is proved as under GAR, then you have not deducted tax. Whether with that TDS deduction that will be an issue, I do not know, but I thought these things. Whether GAR can be applied on a representative assessee. Because a representative assessee is equally liable and responsible for the principal as the principal is. That's one issue. And what about arrangements which are approved by the court? The GAR will be applicable. So these are the certain issues that may crop up in future and will share with you. There is no answers to it, but that's the exciting part of it. Now we will sit down and find the answers. Thank you so much for the patient hearing. Thank you, sir.
Sir, whether arrangements like Starbucks, Google, etc. will be affected by GAR? There were, say, GAR provisions in UK.
So that is economic subsidy, but they will not be hit by GAR. Otherwise, they would have already caught. But point is not that. Point whatever is morality. Even then, people are saying that even if as per law you're not liable to pay tax, please pay some tax. See, if you see the Google arrangement, the entire Google's 80% of Google's income comes from IPR, and that entity is in a tax haven. Whereas they're using Indian entities like third world countries where they're getting the contract research done. I mean, Google is after all it's research. So they're captive. Their only cost price is given. And in Ireland there's a lot of activity. But Ireland, why? But Ireland they have brought in this 12.5% tax concept. And there is economic substance in Ireland. But people don't mind creating the economic substance there because then the tax rate is very low. As a result of which, all the countries are wondering, see, where is my pie? Where is my share in the pie? In that context, GAR will be a very, very important tool. And for that, the moment a GAR is hit, whether the reputation of that client, where does it go? So we have to ensure that our arrangements, our disclosures are such that it does not attract GAR. In that context, I said.
How will BEPS and GAR work? Suppose base zero is a profit.
So those will be specific provisions. And as I told you, that GAR is not, as I do international experiences, that GAR is not made a tool of either protect your base or to collect revenue, which could be the purpose of base. BEPS is that base erosion and profit shifting. They are trying to fulfill specific objectives. But GAR is very fact specific. In a particular fact, what will happen? So I don't think BEPS and GAR will overlap. If properly implemented, that's a very important.
You have UK coming out with GAR. We have Starbucks and the syntax and all that happening. In the same breath, you also have a patent box regime which is introduced in UK for they're attracting IPs to be housed in UK from other countries. So basically, there's a tax competition also happening at the same level. So that, can we say that a clear and unambiguous policy test is failing?
Yes, because the world is baffled.
Yeah.
See, that's the world is baffled. It is digital commerce. See, where is the income arising? No one knows.
They want to tell.
So this is clear and ambiguous policy test will always fail. So the world has become one now. As Friedman said, the world is flat. So that's why we will slowly, moving to absolutely new normal. Something will be, all this will be passing. After 5-10 years, we'll be all faced to face a new normal. There will be some new policies, new strategies. And then the BEPS is, a step in that direction, as I foresee, 5, 6, 10 years down the lane. So entire philosophy of tax administration and tax compliance is going to change. Lakshmana, you want to ask some question? You asked me so much in the office. Thank you so much.
Mr. Sen, that with the detailed provisions of GAR in India and also the world. I think before I request Mr. Kirit Dodia to present a formal vote of thanks, just a short that we are having a tea break after this immediately. It will be just at the back and we will be back of this hall and it will reassemble after 15 minutes. Now I request Kirit to present a formal vote of thanks.
Hello friends. Though it was a challenge for Mr. Sen to keep all of us active and attentive, but I could see sitting over here that about 99% participants were attentive, and that proves that his talk was very simple and very entertaining for us. Like we were knowing new things about the GAR and various other topics and other parts of the world we came to know GAR provisions. And I request all of you to put your hands together as a mark of our love. Yeah, we will break for 15 minutes.